Hello, everyone. Welcome back to the Rational Investor. Where are we? We're the .com site now. RationalInvestor.com's daily brief. Woohoo! Party! Woohoo! I see the YouTube page is on. So, hello, YouTubers. We've got quite a bit in flux right now. Alex is actually traveling. He is en route from Vienna to California right now. I'm not quite sure where Thomas is today, but I think he said he might help us out. I'm heading out this afternoon to LA. So next couple of days going to be a little bit choppy around the site. I apologize, everybody. We are going to do the level 3 group tutorial session that starts at 11 o'clock. That's in about 2 hours today. It should just be Q&A. They're working away on options. So once that's done, I'm literally just picking up and heading straight to the airport. So I'm not going to go too lengthy here this morning. And frankly speaking, with the U.S. holiday, the stock market obviously is basically a non-event. But it is interesting to see how Bitcoin is acting in here through here, because I made the argument that Bitcoin in a weird sort of way is kind of like it's the ultimate fear proxy now in the marketplace. If you have absolutely no faith in the system, you go run into Bitcoin. And I kind of think that, and this is just purely Brian's conjecture, that we had a pretty big sort of state event down in the United States, the memorial service for Mr. Bush Sr. And Mr. Trump said he was going to be at the services, and I believe that there was going to be quite a tense situation with him being there. And you can go check out all the stressful moments on Twitter. People took videos and memes and all that kind of stuff. And I did notice that there was sort of like a formal hello by Mr. Trump, and he shook hands with Mr. Obama. I don't think any of the other people were even the slightest bit interested. And you can see what was so cool is find the memes of it. Clinton and Hillary were sitting on the other side of Obama and Michelle, and you could see Hillary Clinton, man. Oh boy. Stress central. So what was interesting following that, though, is like Bitcoin was sort of sitting there going, okay, do I break? Do I go? And then literally within probably about 20 minutes of that sort of event happening, and there was no fist fights, nobody broke out into shouting matches or anything. And it was interesting. I literally watched Bitcoin start to slide as soon as that event happened, and basically we've been heading down since that. The only thing that I'd sort of comment on in the broader market, I don't know whether it's really healthy for us to get too wrapped up in yesterday's massive slide in the Dow. We had sort of talked to you recently in the daily briefs about how all they did was they just brought the market right back into a shorting zone. And so yesterday's monster slide, it catches a lot of people's attention. The media is talking about it, 800 points. Oh my goodness, sky's falling. But the irony of it all is that really not a heck of a lot technically happened here through that event. We were getting up near the upper end of the trading range, and now they're just bringing her back down to the bottom end of the trading range. And you'll notice that on this chart, I've noted that there's a heck of a lot of gaps. So my hunch is there's going to be a lot of back and forth here for the next while, including these monstrous holes off of these lows. And one might even argue that, on the NASDAQ, the tech stocks, I think they've been beaten up enough that you might see lower lows, but I don't think so. I think if anything, the area of the market that I think is really dangerous right now is the bank stocks. And I think you could make the argument that the Dow could realistically come back down to sort of this 127, basically do a full retrace of this previous range back down into candle body lows for trade location, all that kind of crazy talk. Interesting how, though, there aren't really any gaps down here. So it's fairly clean trading, which in a weird sort of way leads me to believe that they're going to try and pivot it back down here somewhere. But, you know, I mean, the long and short of it here, that's 25,000, big fat round number. I don't think that should have surprised anybody. And this gap right here is at 24.3. That's another 700 points, right? So don't be shocked. Yes, the point numbers are pretty big, but we have to understand that the index number is pretty big too. So as a result, I always think in percentages. Okay, so I just wanted to make that reference about the stock market. You know, we've talked lots recently about yield curve. There's no doubt about it. The writing's on the wall. Either the Fed raises short-term interest rates, or they cause they take the chance of the credit markets just completely seizing up, like in 2007, 2008, and we have a financial asset crisis. So it's almost like they're damned if they do, damned if they don't. And what was really interesting, I find this fascinating, is that lo and behold, right here, right now, the Fed was actually supposed to have their semi-annual presentation in front of Congress. So if, you know, I got a funny feeling this was an awfully convenient coincidence for Mr. Trump. And I noticed that as soon as this event happened, everybody in Washington was instantly like, National Day of mourning, shut all government down, no FOMC presentation in front of Congress, yada, yada, yada. So I just wonder whether, you know, that was a little bit convenient for the people in charge as well. That's always an issue. But, you know, the market is speaking, and frankly speaking, I was quite surprised. I really didn't think we were going to get this kind of insane rally in the bond market. I actually thought that this was an expanding wedge and we were going to top out here and break back down and come back down to these levels. And that's sort of that 4-hour kind of conversation when we did the sort of full review of the bond market. I certainly did not expect this explosive move off of this. But, you know, through that bond market presentation, we talked a little bit about trend lines working, and market structure signals on the other side of trend lines. So it makes sense to me that this trade is working. You can see the very noticeable gap here on the bonds up basically where I plot my calls last summer. So the irony of it all is we get a nice little pop up into these levels, and I might just walk away from that bond trade at scratch. We'll see what happens. And the irony of it all is I actually wanted to sell that bond call before the end of the year to offset capital gains that I have elsewhere. And now the silly market is bidding that bond back up, the bond call. So as a result, I'm not going to be able to book as big of a loss. How ironic. Anyway, you know, broader market. And like I said earlier, what I'm really concerned about now is the banks. Here is basically the Canadian financials. And they often say because of the size of the Canadian bond market, I beg your pardon, that's not correct. Because of the size of the Canadian banks, they are national banks, whereas in the United States, the banking system is more regional. How you doing, Jamie? You want to? Whoop, and he's gone. Jamie was going to do a presentation for us here today, so he's trying to get his microphone working. And you know, Murphy's Law kind of sucks that he just. If you're in the lounge and you see Jamie popping in and out, that's what he is. And if he gets his microphone working, we'll let him do his presentation. Okay, so back to the story. Canadian banks looking extremely heavy. You know, the biggest Canadian bank around is Royal Bank. And as I said just a moment ago, these are national banks. They're nationally chartered, which means they have like basically a God's gift to run their banking business. The government will, basically they are pseudo government. They call them crown corporations here in Canada. So, well, no, not technically crown corporation, but they're federally chartered, which means that they sort of are, they have like a blessing by the Canadian government, very central control kind of idea that in essence, they operate across the entire country, whereas U.S. banks are regional and they don't have that federal scope. In fact, they operate from state to state to state. So in a weird sort of way, you know, we had an old saying in the marketplace, just follow the Canadian banks. They're so big and they're so powerful. And a lot of these Canadian banks have big U.S. brokerage operations and stuff too. I mean, I don't know. Does anybody see any letter of the alphabet jumping out at us here? Maybe. I mean, hopefully everybody sees. If you ever see the market smiling at you, that's trouble. So, and of course, we've been talking about this forever. The Canadian bank I wanted to short, CIBC, has just come straight off its highs. They're pretty heavy in the mortgage business, so it makes sense if Canadian real estate's looking difficult. This is a weekly chart, keep in mind, and you can see the AB equals CD. It sure looks to me like they want to bring these guys back down here. So we look at the Canadian banks. They don't look very happy at all. And, you know, we have an old saying, follow the Canadian banks. But if we actually jump over to the U.S. banks, I was actually tweeting this out a while ago, and I think this is pretty important. Can you see the potential really big smiley face coming in on our buddy JP Morgan? And I said that if you ever see the market smiling at you, I put this tweet out, you know, get ready. You can see there's a massive line in the sand here. And if we do puke out here, this is going to basically, in fact, you might even argue a bot short might be setting up here. But AB equals CDs, you know, that's basically going to confirm that big ass M if that plays out. So ironically enough, yeah, and, you know, just for argument's sake, let's throw on Goldman. Let's just see what they look like. You know, not necessarily Emmy. If anything, who can tell me? What does that sort of look like? I've been doing this so long, so this stuff sort of just jumps out at me. But does anybody, is any sort of formation here? Yeah, very good, Andrew. So boobity boo, to boo, to boo, to boo. It's kind of sloppy. I don't know. It's tough to say where the shoulder is, but that looks awfully head and shoulders-y, eh? So if that's a fractal and, you know, basically the head and shoulders, again, sort of that same commentary. I don't think tech is really where I'd be most worried right now. The area of the market that I think is going to knock the Dow down is things like the U.S. financials. And you can see all these gaps. Look at that big old hole in the charts there, and look at all these gaps down here. So really, it shouldn't surprise anybody. Oh, Jamie, I see a muted microphone. That's progress. You want to see if you have a microphone now? Jamie, hey, he's alive. All right. Excellent. So good to see that you've connected. You know, Brian will finish his rant here in the next 10, 15 minutes. And then we'll have a nice presentation by Jamie and then send you guys on your way. So with that said, interesting, you know, us Canadians, poor old Canucks. And this sucks because we were just even talking about this. I'm heading down to LA this afternoon and I was going to go buy some US dollars. And I was like, okay, I'll just do it on the way to the airport. Canadians announced that they were not going to raise interest rates, which really shouldn't surprise anybody because these economies are extremely weak. And of course, Canada is heavily oil dependent. And the crude market, we've been talking about this lots lately, the crude market has just gotten absolutely destroyed. So we should expect a lot of downside pressure on the Canadian dollar anyway. But they came out with news that they were not going to raise interest rates, and bam, silly Canadian dollar just lost a penny, maybe about a half a penny. So the point here is that us heading down to LA, us Canadians, we're going to get another shot in the arm when we go and buy our US dollars. Wonderful. You know, the writing's on the wall here. We've been talking about this forever. Really good proxy for the commodity cycle. Just simply follow the commodity currencies. I don't know. Does this look bullish or bearish to you guys? We have this very wide sort of AB equals CD try to come in here off of these sort of panic lows. I don't know whether that's completed or not. Nope, came a little shy. But on the other side of that, we've got this nasty smiley face here. So, you know, for the commodities in general, for the commodity as the commodities currencies act as a proxy for the commodity sector, 3 lower highs, in fact, 4 lower highs. We're just making lower highs and lower lows here. We did have a bit of a bull divergence here, but if anything, this is a great analogy of, you know, the central bankers can stop a bull market in a heartbeat. If you were interested in buying Canadian dollars against the US dollar, probably best to be hunting for against that 71 area. And I think you probably could make an argument AB, CD. All right, so yeah, that ABCD is going to take us down into that 71 area too, which would make sense because we'll go buy all our US dollars into this mess, and then it'll have a big counter trend rally, and then we'll have to go and buy Canadian dollars at a premium. Anyway, okay, so just to sort of fundamentals going on in the Canadian dollar, and really what I like about the Canadian dollar is, as I said, it's an excellent proxy for the commodity sector. So if it's breaking to new lows, awfully tough for us to make a bullish argument in commodities. Okay, we talked a little bit about the stock market. We talked a little bit about commodity currencies. Swing traders didn't really see anything big happen. And of course, we got FOMC meeting coming up here. I suppose there was a cute little M that you could have hunted against these highs on the Canadian dollar. And I do remember yesterday in the Swing Trader Lounge, I was just like, holy crap, this Canadian dollar trade is totally just leaving me in the dust. But nothing to be done there now. I actually thought yesterday we had a really nice short setup forming on U.S. stocks. How ironic, eh? But it never really developed here. I was kind of hoping for a nice little M top here to take us down. You can see, bang, she slammed right into the 50% roll. So the day traders, anybody, you know, there is an empire there. I suppose you could have taken that. I suppose we might even argue if you go down to lower time frames. And really didn't. And okay, so there it is there. You can see the cute little M top way up top there on not really even the best divergence, but nonetheless, there was a quick top that came in there. I was kind of hoping for a nice, well-orchestrated top to set up our nice little old lady kind of swing trade model, but just didn't come in. But we were watching that really closely. And ironically enough, can everybody see now? The stock market top and the short was actually fairly telegraphed, right? It'd be interesting to go look and see what the Dow looked like. Okay, so everybody can see the divergence on the move to new highs here. Willie stupid. Question is, did you have structure to help frame the trade? I definitely think you can make the argument, you know, up against previous highs. Not really the best. In fact, there really just isn't much for us to work with there. So that was a tough trade yesterday. No doubt about it. But we definitely were told. And if anything, this is absolutely the absolute best analogy that, you know, if you are a bull and you see this big honking divergence come in here and Willie is stupid, at the very least, what should we be doing? If you're a bull and you see this div come in here on this move up top here, and you see Willie stupid, what should you be doing? Thank you, Alex. Thank you, Casey. And I mean, this is really, really good learning information. Anybody who's new to the site, you probably have never seen this before, and you're like, damn. But I got to tell you guys, when you see these bear divs come in on MACD like this, and this is a 4-hour chart, at the very least, you know, maybe hunt shorts. And I wouldn't be surprised if that was a perfect 50% tag. Well, actually, Mountain Man, eh? Jesus, goddamn guy. He gets around everywhere. So brilliant Mountain Man tag there. And also, too, you know, a commentary, look left. If we lose these lows, where are you planning on going? Well, back against this traffic area right in here. But like I said, at the very least, when you see Willie stupid and you see a MACD div, at the very least, you should be like, oh man, I got to cool my jets. Okay. Oh, look at that. So here's another one. And actually this makes sense because I do think the Fed's going to raise interest rates. I do think that, let's take that off in there. I do think that, some of these, you know, another sort of commodity proxy type currency, I do think that things like the Australian dollar, the Kiwi could come under pressure here. I'd be looking for some sort of counter trend rally back up on the Kiwi to 69.5 area. You can see the div. Can everybody see that div? You can see Willie's nice and stupid, and actually coming out of stupid. So, 50% rule. I mean, I don't know whether we should shoot for this big one, but we can just sort of throw it on here just for argument's sake. There's, that would just simply be a test of these lows down in this area, which I think is perfectly natural. So let's watch for, the bounce level there. I suppose actually, look at that. That'll set up interestingly, eh? So if we do rally back up into here, let's watch for that double top. 25 is our entry, move stop to scratch, move stop to trailing, and our ultimate target 50%. So let's keep a real close eye on that. Now, gunslingers. Now, I know some of the gunslingers on the site, they, in the bond market, they were hitting RLZs before this thing actually M'd out. So, be careful here. Yeah, you could take the RLZ, but we'll talk about this in Bitcoin in just a bit. If you really want to feel confident that a top has come in, kind of like here, and then if you want to hunt the RLZ, totally fine by me. And you see how that was a perfect mountain man tag right there. It's a little bit dangerous in us just assuming that this is the top. They may go up and do a nice little FU just to run the stops before the M actually comes in. So swing traders, I do like the idea of us hunting shorts on these commodity proxy currencies, and probably the Australian dollar is the same sort of thing. Usually Aussie and Kiwi look similar. Oh, wow, look at that. The Australian dollar already topped out. Son of a bitch. So you can see the M top there. This thing's already working its way down, kind of like the Canadian dollar kind of thing. So if anything, actually, I kind of like the fact that the Kiwi's a little bit delayed here. It might give us the opportunity. So let's keep swing traders. This is specifically for Zach. Let's keep a close eye on this. Jacob, if you're practicing swing trading. Also, Jeremy. And, of course, anybody else who's participating in the swing room. Okay, so, and actually that's a good dovetail, right? Just a great anecdote about V tops and V bottoms are not bottoms and they're not tops. You can try and do RLZs against those levels if you feel pretty confident, but quite often they get washed, and I think we just saw that in Bitcoin. Okay, so with all that said, let's hop on over to crypto now because we're already about halfway through and we got to get on to Jamie. We sort of talked recently about potential bottoms coming in the market, and I had drawn up, where the hell is it? Sort of several different scenarios that I could see potentially developing here. And frankly speaking, I didn't know which one was gonna be the level, and you never do. I mean, we're all just traders here. Anybody that can tell you that they know specifically the future, I think they're full of horse hockey. We're all here just trying our best. We'll start off with we had three different zones to watch here. 3660 definitely got some respect yesterday. But the problem here, and I think this is an excellent analogy of harmonic traders, is had you taken this harmonic level, and actually I think I have another chart that's this one's a little clearer. Had you taken this harmonic level blindly, and some harmonic guys do, you would have just an absolute kick-ass fucking trade. But we all have to acknowledge, and it's really important if you don't know this, and of course we go through this in the level 3. This is why I don't really like teaching harmonics to beginners, to traders, because this is tricky shit, man. But harmonic traders, they have a very strict rule that they need to take partial profits at the 38.2 tag of the bounce. So I think that's exactly what happened here. Hit the level, boom, right into 38.2, take partial profits, stop to break even on remaining, and they got stopped out on their remaining position. It's just as simple as that. I did really like this morning waking up and seeing the meltdown back into this zone's reload zone. And of course, Brian and his obsession with candle body lows. I saw this event here and I went, son of a bitch. They rallied it back up. I suppose you could argue 38.2 off of this range. And if anything, guys, like, it's super important that if you're going to be day trading and trading off of these lower levels, that you don't get married to a position, right? Try and get yourself into a risk-free position as fast as possible. Does it make sense here, guys, off of just this smaller trade? Rally back to 38.2. A lot of guys are going to be just like, all right, take partial profits, move stop to trailing, or move stop to scratch. And if it comes back down to my level, I'm going to walk away. I hope you guys understand that. You know, I know a lot of people on Twitter, they're going to shit on me and they're going to say, Brian, you said this was the bottom. That's not a trader's life at all. I mean, there's no guarantees in any of this shit. What I did tell the Twitter public this morning was I don't mind the idea, if you're playing on OKCoin, to come in here and take your shot. There's 78.6. There's the Gartley level. Take your shot, and this was reload zone within reload zone, but I think you have to risk against these lows. Why do I say that? Because remember last week, they did exactly the same fucking thing, and I even like put it out on this tweet here. This box, right? Remember, you know, the New York guys, and it was interesting, Thomas's comment yesterday about how like the Merrill Lynch traders and all that kind of shit, right? They are all over this market now. So do you remember last week? Does anybody remember? I don't know. Well, 1 week ago in crypto is like forever. But we basically had nice bottom come in, set up reload zones. Fuck you. Stop them all out. Do not go to new lows. Up we go. So this is what I'm worried about, and that's why I sort of said in the public tweet, and somebody in the lounge asked me today, well, Brian, why are you saying risk to new lows? Well, because I do believe that what we're seeing right now is that sort of fuck you-ness. At the same time, too, I'm also concerned, right, if we actually draw some AB equals CDs like boobity boo, that painted that target. Wow, nailed it. And it bounced right off that level. So I wouldn't be surprised. And now, you know, the Gartley, this is old trade now. We should probably take that off. Now, I think that the market is trying to work with a bat. The only problem with bats, and this has been sort of my conjecture all along, is what is the fulcrum that we're going to use here, right? This was 61.8. If this is a bat, this is 50%. And what was really interesting about this, have you guys ever heard me talk about billiard ball theory? Every once in a while, I bring it up. But to me, this, and think about like anybody, has anybody ever heard me talk about billiard ball theory? Oh, good. So somebody has, cool. So can you see how this pattern looks very suspicious? And it's interesting how this pattern developed, right? There was the Friday New York close. So that was kind of like a false dump to start the weekend off, and then they had their shenanigans. But it's weird. It's kind of like this is it's a very odd looking fractal, but I often see this kind of pattern. And do we want to take a moment and show you the billiard ball picture, or shall we just leave it at that? It's just going to waste time. Anyway, take my word up, Alex. Yes, take time. All right, let's see if we can find the billiard ball theory. Where is it? Over here. Billiard ball. And see our investor. Oh, I have to remember how do I find this? See our investor. Oh, that's what I did. Oh, you know what? I think actually I have it under fractal. Hey, there we go. Wow, that's weird. All right, so here's the image. I don't know whether you guys can see this, but can you see the similarities here? Oh man, this is kind of tough. Can we move that? Yeah, there we go. All right, so we've got spike down. So I think that's kind of like this. Then rally up, monkey. which kind of feels like this, then spike, but it's sort of upside down. Actually, yeah, no, I would say this is upside down. So this point here, it's the exact inverted, right? So it's inverted billiard ball wherever Joseph is, or Joshua. So this peak here, I think, aligns with that peak. This rally peak aligns with that. This down here, this messiness sort of aligns with this. This peak aligns with this. This dump here aligns with this. And that's sort of a reversal pattern. Up we go. So I'm not quite sure exactly what is the specific point that we have to use here. And of course, you know, they often say that trading is more of an art form than a science. So, you know, exactly how this harmonic, what level we should use, you know, if we change this to like a clothesline, you can see that now you can really see that fulcrum, you know, right off of that level right there. Maybe that's the level that we should be drawing it off of. I don't know. But hopefully you guys can see that sort of billiard ball kind of thinking. And in a weird sort of way, it maybe looks very much like an inverted head and shoulders. But I think that this was an important fulcrum for the market. So that's why I've been sort of obsessed about this of late. I might be completely wrong. Remember, everybody in the market, it's just purely their opinions. You know, if we look at, I shouldn't have taken the Gartley off. Did I actually get rid of it? That sucks. But if we look at what just happened here, so the BAT says that it has to come down to 88.6, and look at that, right? So now we've got another level, doink. This was also an ABCD. Can you guys see that? Is my screen clear here? So I don't know whether I have those numbers exactly right, but it doesn't shock me that we've come down here and we're trying to pivot here as well. So now we have to go through the whole same old thing. CR Investor. Okay. All right. Thank you, Shane. And I think, you know, like what I'm also very interested in is, was this a classic FU against that panic dump low there yesterday? Also, too, and I just noticed this as well, we could draw a trend line boobity boo, boobity boo, and that also basically corresponds with that level as well. So, you know, like I said, in the sort of public commentary, yes, there are levels in here. I definitely think traders who fancy themselves as traders, if you had taken reload zones in here, then I think you got to walk away from this trade if you were playing this range. I mean, it's just the way it goes. But I'm thinking more bigger picture, right? I'm thinking more like I want to risk against these lows. And also, too, sort of like, you know, thinking about the BAT, there's a nice trend line off of those lows. And it looks like we're coming up against that level as well. Let's see it go. Man, this is getting messy. I don't know where that low is. Do I have the magnet on? Yeah. Okay, so that's down in that area as well. So Gartley off the table. I think the Gartley trade produced that 38.2 bounce. So anybody who had taken that blindly there, they got to hop at scratch, you know, sell part of the position at 38.2s, and you have to sort of get yourself into that habit if you are a harmonic trader. Move stop to scratch, blown out on the rest of the position, and here comes another one, right? And I wouldn't be surprised if there are harmonic traders that took this trade. And the same logic, right? I'm not quite sure how high we should go here. Do we just go off of this level or not? I'll leave that to Scott Carney and his boys, but it is interesting to see just off of this range. 38.2 is right there. So I would be expecting a bounce right back into yesterday's levels here through the day. That wouldn't surprise me at all. So if you did blindly take this trade off the 88.6, try and take some partial profits on a revisit of this level, move stop to scratch, and if we head down below, get out of that remaining position. I also think, you know, more FU kind of conversations. We do have this AB equals CD also working. So I think we can take, I like to put little check marks if I see that the AB equals CD has been validated. I think I'll give this one a check mark now, but this one's still floating out there. And of course, that's going to take us right down against these lows here. So get ready, guys. This is going to be some pretty choppy action through here. And of course, you know, all the higher time frame players, all the beginners, 3-step setup, right? Location, divergence, structure, go. We're not even really developing that yet. Number one, we're off of like a day trader's chart here. So, you know, please understand for the higher time frame players, in fact, we've been talking on the site about this recently. This I would consider a swing trade. And I do like on Max this 88.6, right against these tails. It's also a 1.618 against this range. Same conversation as I said before. You're going to risk to new lows. And what I do like about this trade setting up now is we're now starting to get the smatterings of divergence. And Willie is finally starting to get himself down into, you know, close to being stupid. It's not quite there yet. I would say, you know, and this is the trade we've been talking about on the site. I do like the idea of probing very small trade just to see whether this actually takes. If we break to new lows and I've given $10 wiggle room on this trade, then I'm just going to walk away. It's as simple as that. I mean, very, very small trade. You know, it's 10x leverage, so it's like 0.05 BTC. So we're going to control about a half a Bitcoin. And if the trade does work, you know, same sort of logic as those other ideas. I might even consider doing 38.2. But I did find it really interesting that if we focus in on this area down in here and risk to new lows, that a 50% rule tag, which at present would just be nothing more than a tag of the POC, it's going to produce a 2-to-1 risk reward. So that's very appealing to me. I'm very interested in taking this trade. But for the time being, I haven't pulled the trigger on anything. And the only trade idea that we're currently working in this Bitcoin, fishing against these lows, these bottoms, is this MEX, this forwards contract. Now, I will acknowledge, right? Brian's big fan of candle body lows. We had this candle close here, 36.51. We had this candle close here, 36.30. This candle here opened up 36.51. That's an interesting level in here, right? 30 to 50. And I've sort of drawn this kind of pale line you can see here. And I find it fascinating that the market basically came right down to that level and stopped. If I'm not mistaken, I think some site members actually did pull the trigger off of this. So what this low here is, and this is max, this low is 36.55. Notice 78.6, 36.42. So, you know, within $5-10 of that level, it's looking really interesting. I don't have a problem if people did take this, but, you know, same logic as before. If we break these lows, you better get the hell out of there. Just as simple as that. All right. So the only other thing that I'll mention, just quick boo, Quacker just working away, doing its thing. Not really anything dramatic for us to do. Still contemplating about how we use Grimm's modified bot rules on these altcoins. But keep in mind, these, you know, they're not very big moves, right? So 2-3 sats can be very quick. So I haven't really decided what to do here with this, but it is just working away. And Doge just broke out again, son of a bitch. Still hasn't hit our move stop to scratch level yet, but show me a new high and I'll show you a buy. We haven't broken through these highs, 59, but sitting at 58, looking very strong. And what I find really interesting about this, and I sort of was joking on Twitter the other day, are people running out of Bitcoin and into Doge for safety? I actually got a funny feeling that, yeah, they are, which I find hilarious. But, you know, the bottom line here is, you know, the trade setup's still working away, so there's really nothing for us to do there. Okay, so there's your sort of Bitcoin wrap up. Fascinating levels. I really think this is, you know, for traders, this is definitely the levels that we want to be hunting setups here. if you are going to be trading these harmonic levels, you got to remember 38.2, let some go. Put your stop to scratch so you don't get your ass kicked. I'm fearful of some people just hit this and said, okay, that's it. Or, I guess this one hit this, said, that's it, now to the moon. And they ended up getting stopped out and wiped out. Boo, hiss, boo. Let's not let that happen, people. And then, the final message to sort of the broader community and and a lot of the new people to trading, that kind of conversation is, where's probably the best place to show you? Well, I mean, you can see it right across the board here. Phoenix is perfectly fine. Yes, Willie is stupid. Yes, we're coming into interesting trade location, but do we have any W's here off of the daily charts? Which direction is the higher time frame leaning right now? And unfortunately, a higher time frame still leaning down. And really, for the noob, the novice, really, I don't want to see a close back above 43.49 here on Phoenix. It doesn't really matter what market you look at, but just show me a fucking W, right? If we go over to, well, I mean, I suppose we can do this. We could just pull this up as the daily, and you can see the high up there, right? If this really is a bottom, if this is the ultimate pivot, then just give me a close back above here, right? And then we'll know that the bottom's in, and away we go. But it just ain't there yet, right? So all we got to do is we got to wait. So, all those new people, the people that are like little old lady nibbles, I'm very conservative. I'm not really a trader. I'm just, I'm an accountant. I'm a lawyer. I'm a doctor. Has Bitcoin the trend turned back up? No, it has not. And of course, probably the last thing, I don't want to shit on people's day, but we have to remember we're still in the hangover year. I don't know what the rest of this hangover is going to look like into year end, but we can't really call a bull until, number one, we get out of the hangover year. And then hopefully you can see the process that Bitcoin went through to finally put in those weekly W's. Big panic dump, reaction out of that dump, then sideways consolidate, big W, and away we go, right? And then another W, so, long shots, take partial profits, another long shot, and then your weekly W's, the big higher time frames, all right, we're back in the bull. But my hunch is that doesn't come in until, literally 1 year from now. Boo, hiss, boo. Okay, I think that's given everybody sort of an overview of what I'm seeing in the market. What do you think, guys? Was that a pretty clear message? I hope so. Well, Jamie, it's interesting. I mean, we haven't gone through too many of the alts, but man, there are some alts that are just going nuts here right now. Who was it? And actually, Jamie, you want to take your microphone off mute? Maybe say hi to everybody.
How are we doing, everyone?
Hello. Oops, you're awfully quiet there. Is BNB taken off? Because I was kind of bearish of BNB recently. That would make sense. But there were people on the site that were banging out doubles on waves today, so I was very proud of them. So, the market is selectively moving.
Yeah, it's been a good couple of weeks, to be honest. I mean, I suppose a lot of people, you'll have some people who have bought a few months ago, so they're waiting until they go back, and they haven't obviously sold their position. So,
could be. There's definitely that in the mix as well. Okay, why don't we leave market talk for that? Like we said, higher time frames, still cleaning up. Lower time frames, if you're a trader, day trades, harmonic levels, all right. Swing trade, think it's still developing. And the position traders, the higher time frame people, you're still cooling your jets. Okay, Jamie, what did we want to talk about today? Do we want to do a little bit of fundamental analysis with you today?
Well, that's all I do, Brian. You know, man. All about fundamentals.
You want me to be showing any document or any screen or anything?
Yeah, so I'll try and screen share without me throwing the computer up the wall. So let's see if this actually works. I don't think it wants to, doesn't it?
And also, well, while Jamie's getting that going, just a reminder, if you are in the UK or Europe and you can, Jamie's sort of the quarterback of the UK meetup. I think he's got masks of one particular person that he's handing out to.
Yeah, well, if I'm honest, we haven't got enough for everybody now. Originally, there were like 12 people coming. I ordered 15. I thought, no, there's not going to be more than 15 coming to. Now I've got the table. I've had to change the table for 26. So the pub's been really good, to be honest, because yeah, I was worried. I mean, this time of year, mid-December, it's difficult to get anything in London. So, but they've been really good. So yeah, we got about 26 coming. So
wow, that's cool.
It's going to be a big meetup.
Right. Yeah, and you got I think you got about 4 or 5 TRI principals there too. So it's crazy.
John's been really good. John's organised an apartment for everyone. So
awesome. Okay. Do you want me to show the TRI UK meetup document?
Well, probably best just to direct message me. I don't think there's anybody left now, but if there is, just give me a direct message. It's just Jamie.
Okay, so you've all been given instructions. If you're watching this and you want to participate in the UK meetup, you know what to do.
Because we've got all the food sorted, so I need to submit that to the restaurant.
Okay, so the question here is, do you think you can screen share today, or do you want me to all screen share?
It's not letting me screen share. Of course it isn't.
Right. Well, if there's a document, it's no big deal. I can, and you can just tell me when to move to the next slide.
Okay. Can do. Okay. Do you have Word, or have you only got Google?
I have. I don't even know what I have. I use this Open Office, so I don't know what's going to happen with that.
All right. Okay. I'll send it to you anyway.
But if you can just post it on in the Rocket Chat or something like that, we could probably do it pretty easily.
Okay. 1 second.
Am I gonna get a fill here? Don't rally away from us now, jerk.
What are you looking at?
Oh, I'm trying to buy some Bitcoins. Do you want to buy some Bitcoin? Where's that guy? Eh? We haven't heard from him in forever.
Oh, he doesn't need any more songs. They're too good. They're pricey.
Is that what his name is? And actually, I don't know where Axel was here this morning. I totally think Axel could totally be him if he wanted to.
Oh no. Anyway. It looks like that it doesn't accept the PowerPoint format. Rocket Chat doesn't. So
okay. You could
not letting me screen share, to be honest.
Yeah, well, if anything, this is a great where do you want to email this then?
I can we'll see if I can
all right, well, we got about 8 minutes left here, so maybe we just put this on the back burner for today, and we'll attack this in the coming weeks. It's up to you, Chief. Do you feel stressed out here?
No. Have you got Telegram? Telegram should work.
Sure. We can here is Telegram. Where do you want to put it? In your UK meetup room?
I'll put it in the UK meetup, yeah.
Which room is that? TRI UK, right?
TRI UK, yeah. I'll just
okay, there you are.
All
right, and this should have a whole shitload of really funny GIFs and memes and stuff.
Well, now that we've gone over to Rocket Chat, we don't use the TRI UK much now.
Oh, okay.
Telegram, so yeah.
Is that you as a troll?
You're so kind.
Hey, there we go. Seasonal analysis.
There we are.
Let's see what happens when I click on this. All right, something's loading. Hey, yeah, there we go. Okay, so here is Jamie's presentation.
Okay.
I suppose if you want a copy of this, you can always PM me. So.
Yeah. So I thought today I'd go over seasonality analysis, just in general, to be honest. I mean, I've had friends talking to me going, oh, is it time to buy the dip with growth stocks, etc. So I thought basically just to help everyone in general, just to think about different ideas before entering a trade. of things to be cognizant about and different ways to just give you that extra thing in your tool belt to use before putting on a trade. So to recap anyway from the last time when I did a presentation, so I spoke about the construction sector. I mean, America has just been killing it and still is killing it, looking at leading indicators anyway. But as we can see, I went on about the building permits from last year. And they've gone now to the downside on the long-term uptrend. And to confirm that, do you want to go back to the first slide?
Yeah, sorry. I was trying to present your slideshow, but it went on a different screen. I apologize.
You might just have to zoom in.
Yeah. Why did that do that? Let's try that again. But it does it over here, so that's kind of a mess. Okay, so just give me a second here. And then we'll go like that, and then we'll go slideshow. There it is. And what am I showing on Hangouts?
You're showing what you've been showing anyway.
Okay. Wow, what a mess. Bear with me here a second, guys. Oh goodness. What the heck is this thing? Okay, so that didn't work. We'll try it the other way. Okay, where'd it go? Telegram, right? Okay. Lots of fun. Fun. Are you gonna open now?
Much professionalism.
Maybe I. Oh fudge. Oh, where'd it go? Oh, way to go, Brian. Yeah, this is what you call ad-libbing. Okay, I'm not quite sure where the slideshow went. Over here. No. Over here. That's weird. Just disappeared. And this doesn't want to load. I think the gods are not happy with us today for one reason or another. Look at that. Google just kicked me out of everything. Oh, my goodness. Wow. Oh, fudge. I'm sorry, guys. Show in folder. Okay, maybe. Let's see what happens when we're there. So where the heck is it? There it is. Okay, let's try this again. Open. No. You just don't want to open. Well, everybody's going to be like, I want my money back. Damn it. You're a loser. Why won't that open?
They'll want a refund from January, though. The price in January.
Give me my money back. Yeah, this is so bizarre. It's there, but it just won't load. Yeah, I don't think this is going to work here today, Chief. We probably we should probably be a little bit better prepared in the future, but it'll give us an opportunity to do it again.
Yeah, I'll come on Friday. Tomorrow I can't make it tomorrow, but Friday I should be fine.
Here we go. What's this? Hey, there it is. Yay, we got it back. It's a miracle. Okay, I'm not going to fucking touch anything.
Okay.
Just go ahead and tell me when to move to the next slide.
Okay, it's going to be quite difficult. I did need to zoom in, but it's fine. We'll deal with the cards that we've been given. Okay, so yes, recapping on last month when I came on. So we were talking about construction sector. So on your left, you've got the building permits. As I just said, that they've gone to the downsides on the long-term trend. Okay, so it's quite interesting. So last week, some data that correlates to it is pending home sales. So on the right-hand side, you've got pending home sales, and they were at the worst for over 4 years. So
yeah, that looks pretty nasty, eh?
Yeah, so it's something to keep an eye on. I think the next report on building permits comes out on I think it's the 18th of December. So keep an eye out for that one, just on the construction.
And is that this sort of light blue teal line here?
So the light blue line is GDP.
Okay, so it's interesting. GDP follows these pending home sales pretty closely, eh? Okay.
So yeah, so that's that. So to go over to what I'd like to talk. Have I got to make a noise as well? What was the noise was made last time? It was to go to the next slide.
Bing, 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 bing.
Bing, 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 bing. So I thought I'd talk about today. So value. So talk about seasonal analysis and using season analysis before taking a trade. So obviously, if you're a day trader, then you don't need to worry too much. Although you can be cognizant of historical data.
So we're looking here at China Internet ETF.
So here, yeah, so on your left-hand side, you've got US Internet Stocks, which is the blue line. And then the red line is the Chinese Internet Stocks. So you can see.
It's interesting how China is really a leading indicator here, right?
Yeah, so obviously you had the trade war, so that affected the Internet stocks more. But if you use seasonality analysis against the US stocks, so say, for example, this is just an example. So say if you were long US Internet stocks and short Chinese stocks, to just be cognizant of the cyclicality, and obviously, as you always say, Brian, following the smart money, is to look at American seasonality.
So it snows.
Exactly, yeah. So on your right-hand side there, you've got value versus growth stocks. So these are American S&P stocks, value versus growth.
Yeah.
Okay, so where I've circled the trends, obviously changing from value to growth being the leading trend, it's the exact same time as the US Internet Stocks ETF.
That's cool. Oh, interesting. Yeah.
So we'll go over that one a little bit more later on in the presentation. And then I thought, since this is more for medium to long-term traders, I thought I'd go over something that might help day traders. So if you go over to the third slide.
Bing, 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 bing.
So here I've done some historical analysis here to basically, for people who are, say, looking at commodities, this is just an example for commodities. So say if you're bullish on gold and you are a day trader, well, I thought it'd be interesting if people just looked historically at how well at times of year that some commodities or stocks do.
So, and this is like over at what?
This is over the whole ticker. So on your right-hand side, you've got US oil, and then on your left-hand side, you've got gold.
Yeah.
So this is over all of since I think it's like 1950 something. So it's all of
really? Wow, that's pretty old.
Wow. So as you can see with gold, so it performs best in January, and then its worst performance is in May.
Yeah.
Okay, so looking at seasonality, it's so important to look at before entering a trade, just to get a feel of the market, where the money's going. Historically,
the wind at your back or the wind in your face.
Exactly, yeah. So
and it's interesting because we used to, when I was in the crude oil business, we used to always say, buy your unleaded the middle of February. So that would be right down in here. You sell it the middle of May. So that's capturing this move. Made money 9 out of the past 10 years.
Exactly.
And then this would be, so that would be the unleaded play. And then this would be the heating oil play. And actually my best performance trading crude was always in July, because there'd always be a nice little seasonal trough, sell in May and walk away. And then the trough comes in June. And there'd be a nice little headwind rally in crude heading into the hurricane season.
Exactly.
That's kind of cool.
So, I mean, you can do this with all sorts of different things. Well, I mean, whichever commodity you're long, it's just something to just.
Who would absolutely love this information is Raf. What do you think, Raf? Is this the kind of stuff that appeals to you? You got a microphone there? He's really, I don't know whether you guys chat often, but he's really big on season.
No, you know what? Well, when we get down in a couple of weeks, we're gonna have I can imagine we're gonna have some great conversations. So
Totally, if he's not totally pissed drunk.
Yeah, well, that's the thing. I was gonna only come on the Saturday, but now I'm gonna come on the Friday and meet everybody while everyone's.
Oh, that's smart. So you can actually have intelligent conversations.
So yeah.
And also, I'm thinking of one other person over there in the UK that absolutely loves this season.
Phil.
Okay, sorry to interrupt. Keep going, sir.
So that's basically it with the commodities. So just looking historically from month to month, okay, which months is historically well? I mean, are you going to invest in May, for example? I mean, if you're looking at it from a short to medium point of view, I mean, historically it's against your favor. So
well, what I would say is you want to, if you are interested, you get ready to hunt bottoms down in these windows, right?
Exactly.
And it's interesting, Thomas being in the gold business, he's always like December's a really weird month in gold, so be careful. So that, I mean, it's perfect. It's great stuff. That this one slide here is worth us going through all the headaches of getting this set up and presenting.
Exactly, and it takes you 10 minutes just to get it all set up. I mean, it's nice and simple.
I mean, well, this probably took quite a bit of work to put together. So way to go, dude.
Thank you. Okay, so if we go over to the next slide,
all right.
I thought if it should load. Interesting.
Waiting for your cue.
There's no digits on there. Let's have a look. It should have all the digits on, so I don't know what's happened now.
Can you just take a screenshot of what it is you want to
show? I'm just doing it now. Okay, screenshot done. Telegram again. Sorry about the rookie stuff, guys.
Well, like I said, that last slideshow is worth us. That last slide, the information there, that should go in everybody's journal.
Okay, have you got that?
So here we are, growth versus value, full business cycle.
Okay, yeah. So from the second slide, I thought that was only over 5 years. So I thought I'd go over the whole business cycle. And, some people are looking at investing for the whole cycle over the next, once, we have this slowdown and then we start going up again. So I thought just to show you how you can just be cognizant when you see, I mean, this is a nice, easy representation of the smart money moving their money to different types of asset classes. So as you can see, in May 2012, up until 2012, growth was outperforming value.
Cool.
And then value was outperforming growth until, is that May 2013? Yeah, September 2013. So, and then once again, growth started outperforming value all the way up until January 2016, and then value taking over until January 2017, and then only just recently you've had value stocks taking outperforming growth stocks from, I think that was October.
Yeah,
it's just a very interesting point of view. I mean, if you zoom in, I mean, this is quite a whole business cycle. But if you could zoom in on the second slide, I know you can't, so we'll leave that. But it looks like that growth stocks are, over the last week, have started outperforming value again. So whether that'll become a long-term trend remains to be seen.
How do we do that? Oh.
No, risk it.
Yeah, I don't think I can zoom in here.
If you pull up, just as an example, if you pull up TradingView, if you can pull up a chart of, say, Amazon, for example.
All right, where is Amazon? Here's all our tech stocks. Amazon, boom.
So if you go to, let's start with, what is that? So that's April 2012. I mean, you could, well, I suppose we can go all the way up to 2015 if you like, just to just a quick example, basically, of how you can use it. So if you go to
Yeah, you can see the pivots, right? There's a nice pivot there. Whoops. There's a nice pivot there. And there's a nice pivot there.
Yeah, so if you go to January 2016, so in January 2016, if you used seasonality analysis, so value versus growth stocks, so in January 2016, you started having a transfer of funds from value to growth, and it would have given you a great indication that obviously to save yourself from the downturn or the upturn.
January 2016 is right in here.
Yes.
So you start seeing that bottom start coming in. We're brushing up against this. Now we're heading into sort of March kind of time period. So you're at this point, you're actually thinking value is outperforming? Is that correct?
No. So it's outperforming compared to in general, but it's just to stay cognizant, basically, that you're going to have some sort of move, whether it's to the upside or to the downside. A move is going to take place because of the smart money moving. So if you look at, so it's not necessarily which direction it will go. It's just that something is going to happen at that time.
Okay.
So it's just making sure that So for example, if on one of the circles that I've highlighted, it looks like it's going to go to the downside, it will save you a good chunk of time. So you can look at, even if you look at, say, the most recent one, so you're looking at October 2018, is it?
Mm-hmm.
So if you look at October 2018, you can then see that the trend's starting to change. So value is going to take over. So funds, keeping cognizant of the fact that you're in a, you're coming to the end part of the cycle. So you need to think about all the different, where you are in the cycle, how things are changing.
Anybody know what's the tech stock ETF? We should probably look at these ETFs.
So your tech stock ETF is it UIS?
Like XLK or something like that.
I usually just do value and growth ETFs. So
right.
I think
this is the tech stock. That would be classic growth, and then you should be able to compare this to XLU for utilities. That's the classic value stock. That might be interesting to compare these two. So I think you said 2017 was growth over value, and you can see value got really hit hard here. Let's go line. If this is of any benefit, I don't know whether it is or not, but I hope it is.
Yeah, so what I usually do is literally just divide the two. So
that's smart. Yeah.
So divide the two, and then you can see just from the one line that which direction each one's going, because they can go in. They, as you can see there, long-term wise, they go in unison. If you divide the two together, then you can get a clear picture of, okay, money's transferring from value to growth or growth to value. How is that going to affect the asset that I'm going to invest in or am invested in?
Okay, so here is one divided by the other. Let's see what this looks like. Okay. So one versus the other. Let me look at that in red. And this would be, I guess, growth outperforming value, and this is value outperforming growth. What do you think? Does that sound good?
Yes.
Something like that. Anyway, I think that makes sense.
Yeah. So yeah, I think it's a great tool for medium to long term investors, really. So if anybody's looking at investing medium to long term, to have these in front of you, so when, because obviously with seasonality analysis, you can get the roundup, but you want to know when it's being changed, whether it is going to be changed over the 3-month period, but you want to know more specifically when it's going to change. So I think
also too, we did our first 2 week study. You remember that first 2 week study?
Mm-hmm.
And the first 2 weeks of Q3 said that utilities were going to outperform, right?
Yeah.
Which would be sort of that value outperforming. So that's in good correlation.
I mean, you're definitely not restricted. I mean, remember, guys, like you don't need to do just value and growth. I mean, if you're looking at indexes, you can do the same with emerging versus developed economies, for example. You could do it with small cap and large cap stocks. You could do it with cyclical and defensive stocks.
Mm-hmm.
So using all
tell
those
you what, why don't we do your next presentation in a month or so, if you'd like.
Mm-hmm.
We'll do a couple other with these, like you just said. We'll do emerging markets versus local, big, and we can do a couple of the others that you suggested as well as sort of demonstrations for our audience.
Yeah, I mean, looking from a very simple top-down point of view, you could invest in small caps if you want to expose yourself to a little bit more risk, but you want to know when the smart money is doing it. So just be cognizant of the cycle you're in. Look at small cap, large cap, divide the two. When small cap starts outperforming.
Yeah, we should see if we did this same logic here, and we should probably wrap this up fairly soon.
Oh, is it quarter past already?
But if we do, something like big cap stocks, I don't know, let's do maybe the Dow, right? And then small cap stocks, we'll do a Russell 2000. What the hell is a Russell 2000's ETF?
No.
I got it around here somewhere. Nope. You're around here somewhere. I know you are there. Russell 2000 RUT. That wasn't too difficult. All right. So if we do the Dow there in yellow, and then we'll go RUT for small cap stocks. There's Russell 2000. And then we do a comparison. And anybody can do this. It's not rocket science. DIA divided by RUT. Boom. And there you go. You got a nice little seasonal picture there for you. There we are. And there we go. So clearly, I guess large cap stocks outperforming small caps outperforming large caps, et cetera, back and forth.
Exactly. So you can see that when institutions want to, I suppose, have more risk in or more exposure and risk, then you can see that evidently just from that chart itself.
Yeah.
So it's a very powerful thing just to look at, just to, I suppose, calm your nerves, because some people, I mean, I was one of them, just staring at a chart all day, even though I know I'm long term on a stock. So, I mean, having things like this in your tool belt can definitely calm you down, but also just to make you realize, well, this is what the smart money are doing. Today, the smart money are outperforming this or underperforming.
Interestingly enough, even in this environment, they're still favoring large cap stocks over small caps, eh?
Yeah. Well, I suppose
your pivot right here was, I mean, look at that W.
I suppose that wouldn't, well, as in like large cap are outperforming small. I suppose that's, coming to the end of the cycle, I suppose they're going to reduce their exposure. So in high cap value stocks this is
sort of your growth versus value, right? So small cap stocks are classic growth stocks, growth stories. So if we see the market moving into value, we should expect to see this thing trending higher. And really, you'd make the argument that started last summer. And that makes perfect sense. That's exactly what should happen. Oh, excellent analysis here. I'll even put that in the lounge for the good people, because that's a really good chart. So, okay. Is there anything else we wanted to add to the equation here before we take off?
So literally just recapping on everything I've just gone over. So as Brian says, following the smart money. So using seasonality analysis to follow the smart money. And then the things you want to think about before taking a trade. So you want to know where you are in the business cycle. Then think about the type of asset you're investing in. So is it a small cap? Is it a large cap? Is it growth value? seasonality wise, is this time of year the best time for me to invest in this? When's the best time to look at a bottom, etc. Look if the asset's cyclical, and then historically, if the asset that you're going to invest in performs well this time of year or part of the cycle, and then just invest, and simple as that.
Brilliant.
That is about it.
Okay, excellent work, and really, really good information there for everybody. Thank you very much, sir. Totally appreciate that.
No problem. Anytime.
Next time you got some more seasonality studies, or if you see any pivots or anything, and you want to come out and present to the group, feel free to.
Yeah, I think I'll do one probably. I might do one in a couple of weeks. I mean, I'd like to go over globally of how economies are getting on, looking at leading indicators, simply because we're getting to that part of the cycle now. I mean, Italy, their GDP is
collapsing.
Yeah, they've actually contracted, but then their PMI, which is a manufacturing index, is been below 50 for the past 2 months. Yeah. So people don't know that what it means. The manufacturing index is usually a leading indicator against economies.
Yep. So, all right. So I don't mean to be rude. I got a class I have to launch in 10 minutes.
All right.
Totally love the presentation. Love the material. Totally awesome. Thank you very much, sir. Totally appreciate it. And if somebody wants this slide deck, they can just PM you for it or something along those lines.
Yeah, PM me if anybody's got any questions. Just let me know, and I'll be happy to help.
And I think I threw this chart in the lounge. Great stuff. You know, maybe we'll annotate this a little bit to help people. But excellent work, sir. Totally love it. Okay, the only other thing that I wanted to point out to the community just before we leave. If you don't think that there is money to be made in crypto right now, get your eyes checked. Somebody just banged out. They got another half on a triple on Factom.
Yeah, buddy.
Congratulations to who was this? This was XXLT3XX. You rocker. Way to go. Just keep on keeping on. That's the kind of stuff I love to see on the site, because it just simply shows that you guys are applying this this information I'm trying to teach you. Congratulations. Hats off. Just keep on keeping on. As I said, we're going to be in a bit of a flux here over the next couple days. So don't be too pissed off if maybe we load up the site in the morning and you find that we're not going to do the daily brief. I am going to send out an email to level 2ers. If I can't get settled for Saturday and I don't have a reliable internet connection, I'm going to put the class on hold. If Andrew and Reza bring their computers, their laptops and stuff, I don't have a laptop. I just got this super monster computer. Actually, I do have a laptop, but it's like 20 years old. But anyway, I'll try my best to make sure that everything runs smoothly. But just understand that we're all, in flux right now. And I'll be back at the helm in 1 week, back doing everything business as usual. So things might be a little bit screwy over the next week. Just bear with us. As you can see, I'm still working my bid here. Alex B, I think, got his fill here off of the candle body low levels. Way to go, Alex, you dude. So let's see how this pans out. I am fishing. And, of course, I've got little ones working away here. Go Doge Goat. Hopefully we can get Michelle Cabrusa Cabrera to bark like a dog one of these days. But just, get in there and have some fun in the market. This stuff works. It doesn't work all the time. Nobody said that it would. But a good 60, 70% is enough for me, and it's enough for us to make money on this. So get out there, have some fun, knock out those factums and other ideas. And we'll see everybody hopefully tomorrow morning. I think Alex is planning on launching a show. So have yourselves a great rest of your day. Keep your fingers crossed our plane gets to LA in one piece. And thank you again, Jamie, for an awesome presentation. Other than that, the only thing left for a guy like me to say is a big bye for now.